Chief Analyst at GTC, Jameel Ahmad. Jameel, thanks for talking to us. Can you start by telling us a little bit about how the stock market's doing after we saw that global sell-off in September's second day of trading?
Well, we're going to continue that headline because actually we are seeing more of a weak momentum for global markets. The sell-off on Wednesday was not as extensive as the sell-off on Tuesday, which was, of course, the worst sell-off since that unprecedented volatility early August. Nonetheless, I think that what's driving this momentum is a little bit of sentiment because September is seen as a historically weak month for global markets. At the same point, and at the same time, we also need to take into account that global markets are still at very steep levels. But what has not helped matters is that so far this week we've had weak data from both the United States and China, which signals momentum is maybe suffering for the global economy, and that maybe central bank policies such as interest rate cuts and so forth isn't the only medicine that we need. And I also think that investors are just looking at an opportunity to take profit from markets overall.
And gold prices slipped to their lowest level in nearly 2 weeks on Wednesday. What's behind that?
Optimists will be hoping that this is just a hot air balloon where some of the air's coming out, because previously we've seen sell-offs in gold have led to what we call, in terminology terms, buy on the dip, which means that investors look to buy low and then get more profits. Of course, that's worked very well for gold so far this year. I think that we also have to look into the interest rate expectations for September. We do look for the US Federal Reserve, that's the US Central Bank, to cut interest rates, and that should help the momentum for gold. But the key question to ask, though, for those gold optimists is whether the Fed, the US Central Bank, is going to cut interest rates enough over the coming months and maybe over into early 2025 to support what has been a historic rally of more than $600 or so just over the course of 2024 so far.
And lastly, tell us about the key data to watch out for as this week comes to a close.
Our eyes are firmly going to remain focused on the United States. That's because we have the latest monthly jobs report. That's the non-farm payroll scheduled for Friday. Of course, it was actually a very weak and surprisingly disappointing monthly payroll report at the early stages of August that set some alarm bells ringing that the United States economy might finally be falling off some momentum. Since then, we've actually had concerning reports that up to 850,000 jobs might have been overestimated for the US economy between April of last year and March of this year. Of course, jobs is going to be a very key buzzword as we're coming towards the US presidential elections runoff, with that key date only ticking 2 months away from now.
Thank you very much, Jameel Ahmad from GTC, for that business update. And we're going to have to leave this edition